the company has inked a deal with United Health, where United Health members are going to be able to access live and on-demand classes via the Peloton app for up to 12 months at no cost. So buyers in Peloton yesterday, and the stock is up another 6% in pre-market trading. So there you have it, Mr. Chung.
Thank you so much, Eagle Eye. Excellent summary of the news, and we're going to share the screen and take a look more at the market here. This is, what happened to my, oh, there you go. Share screen right there. And let's go to Thinkorswim. I've got the S&P 500 SPX with the regression channels anchored for April 2nd, 2020, and November 11th, 2020 on the right side. And Chris, let's start with you. Pretty nice break of that minus or half negative standard deviation right here.
Yeah, to me, the more important thing is it came down on the 50-day and got support and is up, a little today. So that's kind of that's what's held this uptrend since March. And hopefully it will continue. The element, I guess the stat I've been keeping an eye on is how far these indexes are above their 50-day moving average, and what kind of led to this correction in my mind was we were just getting extended, and the Qs were, up almost 7%. Now they're down to 3.7% as of yesterday above the 50-day, and the NASDAQ composite was 1.8% above the 50-day yesterday. So the pullback is doing what it should do, just kind of calm things down. And there was a lot of good action yesterday under the surface with reversals setting up, and we'll see how it proceeds today.
Great point about the QQQ right here. You just like what Chris mentioned, that 50-day moving average was at 340 last week, and 6.7%. Well, actually, even probably 7% at the peak of that Wednesday session. And so this pullback is certainly methodical. Now, David, you actually tweeted last night through your Twitter handle at DRyan310 that you're kind of expecting a 2-day pullback or possibly more. Would you like to elaborate?
Yeah, well, I said that if you look at the averages over the last, even since the beginning of the year, it seems like every 2 to 3 weeks you get this 2-day pullback. Now, I'm not saying that that's it. We've had a Friday wasn't very good, and Monday was bad, and that we're just going to now roll over. I'm just saying, let's watch and see if we get more than that, and if we get more than that, then maybe that this market has really changed, because and then I think I also went to go on to say that. That there are a lot fewer names that are working now. When I look at hospitals are leading, and then there are REITs that seem to be doing pretty well, but a lot of other groups have really rolled over. That's why I have so much cash. And so it's hard for me to find areas that I can say, confidently go in and buy. Some of the names that I came up with, I can see those are holding, but when you see, the housing stocks really getting hit, and a lot of those cyclical names that were working so well in January through about April, those aren't doing well. I actually don't know exactly where to go in terms of leadership and to get enough names to really build a portfolio. And that's what's so good about having a discipline and only being in names that have certain characteristics. That just kind of guides you to where you should be in terms of an invested position.
Very good. And, I think we're going to go through all of those 5 stocks that Chris and David want to go through first, but let's start with a positive note, and that is HCA. And since we covered the news on this one, and thanks also to our news editor, Ed Carson, for alerting us to this nice action. Ken, looks like a very classic earnings-inspired breakaway gap.
Yeah, I mean, no question about it. It was trading higher in pre-market, and it is trading considerably higher than what it was in pre-market. So up 12%, and kind of near its low. We were talking about this one in pre-market trading. Just kind of feels like you're chasing it up here. Even if we switch over to the monthly chart for HCA, you kind of get a little bit of a perspective here as to why you might be, chasing the stock. You can see just a big move after coming down to around the 60 level. It has, pretty much quadrupled from that price. So I don't really use monthly charts to do a lot of technical analysis, but it has made an incredible move. And we look at the weekly chart here. It's just such a huge gain. I'm not a buyer today. It just kind of feels like feels like you'd be chasing the stock.
What about you, Chris? If you wanted to add a little healthcare into your portfolio, we've reported for several years now that breakaway gaps can be quite good moves, good entry points.
Yeah, but this is more of a long-term leader kind of feel. It doesn't get, it's a stair stepper. It pops up, goes sideways, pops up, goes sideways. So I think just looking at the daily right here, and let's go back to the weekly for a moment.
Weekly, sure.
I think you're much better off to just wait for a pullback and let the average catch up to it. It seems unlikely for it to start acting like a growth stock and go on a big run.
David, also going back to you with your nice tweet yesterday, it got a lot of positive response. You said you actually would be, just like what Chris is saying, probably preferring more pullback opportunities rather than outright breakouts.
Yes, because lots of times it seems like by the time the stock has come up through the base and maybe even spent a few days and then starts breaking out, it's already traveled a lot. And in this market, that seems about as far as it goes. I'd rather see it pull back down on something down on back on a prior base, or I don't want to say that don't buy any breakouts, but you just have to be exactly right on that breakout, and don't just the farther you buy from a breakout point, the more risk you're taking that it's going to start pulling back. So you just have to be right on the money, or you buy them as they're pulling back to 21-day moving averages or 50-day moving averages as they start turning off of those.
It looks like it's already pulled back some, and if we look at the 5-minute on Thinkorswim, just for funsies, let's take a look here. I'm just borrowing your great expression there, Chris. All right, for 5-minute, as a PhD in 5-minute charts, please, Chris.
Again, because I don't think that this is the type that would gap and go. I wouldn't be looking at the 5-minute. It just it'll only maybe lead you to make a trade that you might regret.
Okay, thank you guys. And I just want to remind everyone that as a subscriber to the show, or if you're checking us out for the first time, welcome once again. We have some great resources that are exclusive to the show members, and that includes the Ready List and the Watch List. Currently now 27 stocks, really pared down a lot on the Ready List, but they also include not just position trades, but also swing trade possibilities, and 187 stocks on the watch list. That's considerably down from around 230 last week. So you can also I like to use those two lists as a gauge of the strength of the market for our area of expertise, which is really growth stocks that are prepared to lead the way higher. So on the left side of my Thinkorswim platform, you can see that right now within the Ready List, CRCT, Cricket, Elon,